You are listening to Mining Stock Education, where you'll learn from the top leaders in the natural resource sector and uncover quality mining investment opportunities.
I wouldn't be surprised to see the gold price eventually correct that 1780, 1800 level. That wouldn't shock me because it went up so far, so fast. And but I'm looking, I think the 1820, 1850 area needs to be tested here because the gold price went from 1700 to 1900 pretty quickly. So that would be a healthy consolidation, which needs to happen before it continues to go higher. You never want to see something go parabolic. I don't care what it is.
Welcome back to Mining Stock Education. In today's show, we're going to be getting our monthly check-in with David Erfle from JuniorMinerJunkieWithAY.com. David, welcome back onto the show. You have been telling me and my audience for quite some time that we need to see $2,000 gold, that needs to become the floor for us to really see these junior gold miners take off, or we need to see M&A heat up. Now we have Newmont making a big bid for Newcrest, so these multi-billion dollar gold miners are trying to eat each other up. Is this the moment we've been waiting for?
Well, it certainly helps. I'll tell you that. After we had Pan American and Agnico Eagles boards and shareholders both approved the Yamana deal where they're going to split up those assets. This is coming on the heels of that. And we definitely need to see more of this. It certainly would be nice for someone to come in, like maybe Barrick, to come in and have a sweetened offer for Newcrest. I know Barrick has operations in Papua New Guinea, just like Newcrest does. But I think the synergies are more in line with Newmont because they're really starting to concentrate on the Golden Triangle, and Newcrest has picked up a few assets there. So I think the synergies fit Newmont better. But it'd be great to see a bidding war because that brings more interest into the sector. And the more M&As that happen, it brings more interest into the sector. Bottom line, and this is what needs to happen. There's too many companies. They need to consolidate. The majors need to get bigger. A lot of these juniors, that have competitors in the same area, they just need to check their egos at the door and get together. And we definitely need to see more of this.
So Newcrest has assets in Canada, Australia, and as you mentioned, Papua New Guinea. Is there anything to be said about the sector getting bullish on Papua New Guinea as a result of this deal, or can we not infer that?
There's not a lot of projects in Papua New Guinea. There's several that are very large systems, and I know K92 has one there. That's a junior. That is a very strong takeover candidate. That's a turnaround asset that they got from Barrick and really turned that thing around, and it's making a lot of money. Even at $1,700 gold, it was making a lot of money. So yeah, there's jurisdictional risk even in top tier jurisdictions now. It's all over the place. So but I think it's more positive for the sector based on the coming together of these companies. This just needs to happen. These majors are too small for generalist investors to invest in, and they got to get bigger. They've done one thing. They've done a few things. In the right direction, positive direction is they've strengthened their balance sheets and they're offering very attractive dividends now. That is starting to attract some in generalist investor interest, but there's not nearly as much as there was at the tail end of the last bull market and in 2011, 2012. That's when interest in this sector really heated up, and we had a lot of generalist interest, and they just went away in 2013, and they've yet to return. So they've been gone for a decade, and these companies need to do more and more to attract the generalist investor.
You mentioned Yamana, and that is getting taken over by two companies, Pan American Silver and Agnico Eagle. When you see, and they outbid Goldfields when Goldfields try to purchase Yamana. Is there any significance of two companies outbidding one, or does it not matter? Obviously, the sector is less consolidated, right? If two companies consume one, but any thoughts here you could share, Dave?
This brings more attention. We need more attention brought to the sector because it's a forgotten sector. Nobody cares about gold. The longer gold stays below $2,000 an ounce in US dollars, the interest just isn't there yet. And the more headline news that's generated around this sector, the better. So if two companies want to come in and try to split up Newcrest and offer a better deal, I'm all for that. Just a bidding war of some sort is always good.
Definitely. I've been interviewing Rick Rule, as you know, for 6 years. And Rick is always talking about the need for consolidation, lowering G&A, more efficiency. But he also always says that if these guys, namely the executives, can pay themselves a salary, they're less likely to consolidate. So he looks at the financing window. Do you see the financing window open for junior gold stocks right now, or are they going to be forced to consolidate?
Well, the window is open since the beginning of the year. I've seen quite a few positive financings, and I'm fortunate to be a shareholder and cover several of those stocks in my newsletter. And when I say attractive financings, I mean a company like Vizsla Silver, which you've heard me talk about. That I visited the project. I'm a shareholder. I cover the stock in my newsletter. This is a company that is yet to reach the PEA stage. And they just recently announced a financing, a private placement, 34 million private placement, immediately upsized to 39 million. And they didn't even have to offer a warrant. So when you have an earlier stage company that hasn't even reached the PEA stage yet, be able to attract that kind of capital without offering a warrant, that's very bullish for the sector. There's been several bought deal financings. There was another one announced today. Cisco announced a $75 million bought deal finance with no warrant. So this is starting to happen. It's still difficult for a lot of these other companies. Which a lot of these other lifestyle juniors, that Rick was referring to, that need to go away. But each time we have these capitulations in this sector, the previous major capitulation was in late 2015. When we had a brutal bear market from 2013 to 2015, and we were saying amongst ourselves that, hey, this is probably a great time for a lot of these companies to go away. And it just didn't happen. They wind up getting these, leave the lights on financings, and they don't go away. And there have been several that have gone away this time. There's been Pure Gold, went by the wayside, Great Panther, a couple others. You were associated with one.
Thanks for reminding me.
Mention that and remind you of that one. But, this needs to happen. These companies need to go away. And, so on the one hand, you don't want the financing window to open up for these companies that don't deserve to be financed. But, once this sector gets hot, and everybody starts coming in, even the crappy companies attract capital. So that we're not near that yet. So, but the capital markets have improved considerably this year.
So if you have to hold a gold stock junior through a bear market, would you put more weight, Dave, in your analysis of the company in the management team or in the asset? And the reason I ask this is because I've been reading online and I've seen a couple people say that if you have to have a junior gold stock through a bear market, it's better to have a good asset than a good management team. Your thoughts?
Well, I think they got that the other way wrong. I think it should be the other way around. I mean, that's the great thing about what's happening in the sector right now is we've got all this time to do the proper due diligence, to talk to these companies, establish really good relationships with them. And now with Zoom, we can talk to them. We can call them up and say, I'd like a Zoom catch-up meeting. And they've got the time. And fortunately for a newsletter like myself, they make the time, and I'm able to, keep up these great relationships I have with these companies. So that is a huge benefit. And absolutely, I think the management team is still a number one key. If they've got a track record of going from discovery to development to a sale of a project, and made their shareholders 15, 20, 30 times their money. And I'm holding a couple of companies that have done that in the past, and have even done it for me in the past. And I feel more comfortable holding the shares of these companies. That's backfired on me also, where I've had a management team that has made me a lot of money in the past, but one that they're currently associated with now has not done so well. And I was forced to sell it for tax loss last year. So that happens.
But you're more reluctant to sell it, right, Dave? Because
I'm more reluctant to sell, and that could be a negative also. You hold on a little longer. But this is why you never put too much money into one company. I mean, I really stress that. Of course, the more money you have, the more companies you're able to accumulate. But that's why I never hold more than 25, 30 companies. Right now, I'm holding 23. I spent a lot of time, a lot of painstaking effort for myself and my subscribers, as you know, painstakingly accumulating these things into the end of the 7-year gold cycle low last year. I bought some ugly charts. I mean, these were some ugly charts, and there was a lot of capitulation, bringing an incredible opportunity to us in this sector. And sure enough, we had a 50% move from that low. And now we're starting to consolidate that low, which needs to happen. This consolidation needs to happen, especially in the gold price. It went up $350 in 3 months after going down to $400 in over 7 months. So, this is a healthy consolidation. This needs to happen.
And it's at 1865-ish. And you're thinking later this year we'll get through 2000, if I recall correctly from our previous conversation?
Well, right now it's trying to hold that. Gold futures are trying to hold that uptrend line at 1875. I don't think it's going to hold it, because the shares have been telling us, not only the miners, but silver has been telling us ever since the second week of the year that a consolidation, a correction was coming. Sure enough, it happened last week in a big fashion. But if you want to talk about the gold price now, I'll segue into it. Gold price last week did something very bullish that nobody's really talking about. All they're talking about is the $100 reversal, which of course is made the headline news in our sector when gold ran up to 1975, which was close to that strong resistance zone of 2,000 to 2,100. Immediately reversed and lost $100. But before it did that, it made a monthly close on Tuesday last week at 1945. So gold now is technically in a bull market because it went up over 20% on a monthly closing basis from its triple bottom monthly low at 1620. You have the equities, the S&P 500 is still technically in a bear market. It went down 20% from January of 2021. So technically gold's in a bull market. U.S. equities are in a bear market, but you wouldn't be able to tell that by looking at gold miners right now, right? Because this goes back to the generalist investors still not in this sector. I mean, if you take a big picture look at gold stocks in relation to the gold price, they've been building a 10-year base after being shellacked from 2012. Because the generalist investor still isn't here. So the longer this base, the longer this base forms, the stronger it gets. The bigger the base, the higher in space. Basically, is what happens. And this sector has been forgotten for quite a while, and nobody's really paying attention to it except for us here that make our money in this sector. It's become very difficult to do so. But on the other hand, it's been easier to separate the wheat from the chaff. And for me, it's been a great experience being able to accumulate such a large number of shares in so many high quality juniors that are de-risking high margin projects in good jurisdictions, that I don't even need to mess with companies that are looking for gold. I mean, just put those by the wayside. Cross those off your list. Why take a chance in these early stage companies that are discovery plays when you can put your money into these juniors that have already found multi-millions of ounces of gold, and they're de-risking these projects. And the ones that needed money recently have done so. They cashed up again. They've got plenty of cash to ride out this latest correction and wait until the generalist investor to come into the sector, which they're going to eventually get here. We just don't know when.
Dave, regarding the generalist investor, in the last week and a half, as you know, we had AME Roundup, we had the Metals Investor Forum, we had the Vancouver Resource Investment Conference in Vancouver, and some of the people that I know that were there, they said the spirit was really good, that there was good attendance, there was a lot of energy in the room. Any intel that you can share from your observations?
Yes, all the people that I spoke with said the same thing, and I said, well, there's no wonder why we're having a correction then, because if you know that your generalist investor still hasn't come back into this sector. It's just us trading amongst ourselves still. And you go to a conference like this and everybody's overly bullish, there's nobody left to buy, right? So, A, the gold price had gone up $350 in 3 months. B, it had been technically overbought for about a month. The silver price had been lagging the gold price for the past month. The miners also had been lagging the gold price for the past month after going up 50% in the same amount of time that gold went up $350. So, danger, Will Robinson, a correction is coming. So, if you had the wherewithal not to chase stocks during that move, then you're doing really well. If you accumulated into late last year and you're just waiting, then you're doing really well. But if you were chasing stocks during this latest move, which didn't have a lot of volume either, then you're hurting right now.
So my intel from these conferences came from an investor. Did you talk to executives or just investors or people in the industry, but non-executives, to get your feedback?
Both. I've spoke with a couple of CEOs. I've spoke with a couple of people that work in the sector. Not too many. But they basically gave me the same intel, that there was a lot of bullishness. People were very excited. There wasn't a lot of companies as there usually was. I think there was only about 300 companies this time. The aisles were, there wasn't as many aisles. The mood was very bullish.
And do you think that's because they changed the way they communicate, post-COVID, that more go virtual in terms of their communications, or what would be behind that, Dave?
I think, yeah. And I think just the lack of interest still in this sector. There's, we're just, it's just us, precious metals people, junior resource investors and people that are interested in this sector as a whole that are trading in it right now. I've said this before, and, it's getting old hearing me say it, but until the gold price has a strong floor at $2,000. It's been a strong ceiling for over a decade. So until the market is priced in a strong floor, these stocks really aren't going to do much. You're going to have a few that are going to bifurcate. A few of my companies have been bifurcating higher during this correction because they were sold down too low. The value is still there. You still got plenty of time to accumulate. You still don't be chasing stocks and never be using margin in this sector. So if you do that, you're fine. And if you don't have the time to do the proper due diligence, that's when you invest in a newsletter like mine. Not just mine. There's several others out there that are good as well.
And Dave, your website is juniorminerjunkiewithy.com. There's still room. You limit it to 500?
Yes, correct. I have about 320 now. So yeah, there's plenty of room to come aboard. Yes.
Okay. And when you come on and you tell me it's full, when it's all the way full, what does that mean for our listeners?
Oh, when it's all the way full, then
it's about halfway up the bull market, or
it's getting very frothy. And I will definitely let you know. As soon as it hits, it's limited out before when I had a cap of 250 when there was really nobody in this sector. But once I reach that 500 level, I'll send out an email saying, I've got a waiting list now. But there's plenty of room now. And as far as the mood is concerned, the mood is still very bullish within the sector. This correction was being was being telegraphed by several analysts who expected it to happen a lot sooner than it did. The gold price loves to confuse everybody. It always goes higher than people expect during bull runs, and it always goes lower than people expect during corrections. So I wouldn't be surprised to see the gold price eventually correct at 1780, 1800 level. That wouldn't shock me because it went up so far, so fast. And but I'm looking. I think the 1820, 1850 area needs to be tested here because the gold price went from 1700 to 1900 pretty quickly. So that would be a healthy consolidation, which needs to happen before it continues to go higher. You never want to see something go parabolic. I don't care what it is you invest in, unless you're fully invested and it's near the top of a cycle. Then you're like, hooray, I made a lot of money, I'm selling. But we're nowhere near that now. I mean, just take a look at what happened the last 3 times gold bottomed at 7-year cycle lows. In 2001, in 2008, in 2015. We had huge moves after that took place, and we had capitulation going into each one of those moves.
And we're on the upside, though. Even if your stock, some of them have moved 50%, right?
Some of them have doubled or tripled. I'm not up that much because I was accumulating on the way down, right? Most of my stocks are still up. Some of them are still down. Some are down 20, 30% still. But, I'm not worried because I look at the gold price and I look at what they have in the ground. I look at what they're trading at per ounce in the ground. I look at the management team that is de-risking this project that I'm very confident with. I'm looking at the fact that several of these companies raised money here recently. They didn't even have to. The money was offered, they took it. That's what you do in this sector. The money's offered, you take it, and especially if it's taken at attractive terms. And these companies that are de-risking high margin projects that already have multi-million ounces in the ground, they're getting attractive terms.
Excellent. Well, Dave, thanks for your insights this February. I'll be touching base with you either right before or right after PDAC.
I look forward to it. Yes, I'm looking forward to going to PDAC for the first time in a few years.